Based on the historical data and forecast, Bitcoin shows a downtrend. The RSI consistently dipped below 50, indicating weakening momentum, and recently touched 36.7, signaling a potential oversold condition. The forecast for the next week projects a continued decline, with prices ranging from $109,900 to $103,800. The support level remains at $106,900, while the resistance is at $108,300. Considering these factors, I propose a contrarian strategy capitalizing on potential rebounds from the oversold level. The first strategy will be based on RSI, entering a long position when RSI falls below 20, with a stop loss just below the support level and a target price near the resistance level. Specifically, when the RSI hits 36.7 on October 16, 2025, enter a long position at $107,900. Set a stop loss at $106,800 and a target price at $108,200. The second strategy will be based on Bollinger Bands, entering a long position when the price touches the lower band, with a stop loss just below the lower band and a target price near the center band. The price touched the bottom of the Bollinger Bands on October 16, 2025, at $105,900. Enter a long position at $105,900, set a stop loss at $105,700, and target $116,600. The third strategy will be based on the forecast, entering a long position when the price touches the forecast low, with a stop loss just below the forecast low and a target price near the forecast high. Enter a long position at $103,800, set a stop loss at $103,500, and target $108,000. Combining these three strategies, I recommend prioritizing the RSI strategy due to the current oversold condition. Therefore, the most efficient portfolio will be a long position at $107,900 with a stop loss at $106,800 and a target price at $108,200. Based on the historical data and forecast, Ethereum has shown significant volatility, with a recent downtrend. The RSI indicates oversold conditions, particularly on October 14 and 15, with readings below 40. The Bollinger Bands suggest that the price is currently near the lower band, indicating a potential bounce. Considering these factors, I propose a contrarian strategy focusing on short-term gains. We will initiate a long position when the price touches the support level of $3,740. The stop loss will be placed just below the support at $3,700 to mitigate potential losses if the downtrend continues. The initial target price will be set at $3,870, aligning with the forecast price for October 17 and 18. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI moves above 50 while the price is near the lower Bollinger Band, it strengthens the buy signal. We will adjust the target price to $3,920 if the price breaks above the middle Bollinger Band. This combined approach leverages both momentum and volatility indicators for a higher probability of success. If the forecast for October 23 is $3,760, it indicates a potential short-term downward movement, reinforcing the stop-loss placement at $3,700. This strategy aims for a quick profit by capitalizing on short-term price fluctuations, while diligently managing risk with tight stop-loss orders. Based on the historical data and forecast, BNB shows a volatile trend with periods of both bullish and bearish momentum. The RSI consistently fluctuates above 50, indicating a generally bullish sentiment, although it briefly dips below 50 on October 11 and 12. The Bollinger Bands demonstrate increasing volatility, with the price frequently touching the upper and lower bands. Considering these factors, I recommend a combined strategy leveraging RSI and Bollinger Bands. We will initiate a long position at $1,150 when the RSI falls below 50, anticipating a bounce from the oversold level. A stop-loss order will be placed at $1,130, just below the support level, to mitigate potential losses if the price continues to decline. Our target price is set at $1,250, aligning with the recent resistance levels and the upper Bollinger Band. To further refine this strategy, we'll incorporate the forecast data. If the price approaches the lower Bollinger Band around $1,150 on October 23, as predicted, we will enter a long position at $1,150. The stop loss remains at $1,130, and the target price will be $1,200, slightly adjusted to reflect the more conservative forecast. This blended approach combines the momentum signals from the RSI with the volatility indicators from the Bollinger Bands, maximizing potential returns while managing risk effectively. This portfolio will be the most efficient one. Based on the historical data and forecast, XRP is exhibiting a clear downtrend. The price has been consistently declining, with the forecast indicating further drops to $2.11. The RSI consistently below 50, particularly dipping to 26.2 on October 11 and 31.2 on October 16, suggests the asset is oversold, offering a potential entry point for a short position. The Bollinger Bands are contracting, indicating decreasing volatility, but the price is consistently trading near the lower band, reinforcing the bearish outlook. Therefore, I recommend a short position with an entry price of $2.32. The stop loss should be set slightly above the upper Bollinger Band to $2.35, providing a buffer against potential short-term reversals. The initial target price should be $2.11, aligning with the forecast price on October 23. To maximize returns and manage risk, I propose a tiered target approach. Once the price reaches $2.11, consider taking partial profits and adjusting the stop loss to break even to protect gains. The second target price should be $2, and the final target price should be $1.9. This strategy combines the RSI oversold signal, the bearish trend indicated by the price action and forecast, and the Bollinger Band's contraction to create a high-probability short opportunity. This approach allows for capturing significant downside potential while mitigating risk through strategic stop-loss placement and profit-taking. Based on the historical data and forecast, Solana has been experiencing a downtrend, with prices fluctuating significantly. The support price remains consistently at $177, while the resistance has been around $193. The RSI values have mostly been below 50, indicating a prevailing bearish sentiment, with dips below 30 on several days, suggesting oversold conditions. The Bollinger Bands show that the price has been approaching the lower band, reinforcing the downward pressure. Considering this, I recommend a short selling strategy with a focus on capitalizing on the continued downward trend. Our strategy involves entering a short position when the RSI falls below 30, indicating an oversold condition. Specifically, we will initiate a short position at $185. Given the consistent support level at $177, we will place a stop-loss order at $188 to protect against a potential price reversal. The target price for this trade is set at $177, aiming to capture a significant portion of the downward movement. This strategy combines the oversold RSI signal with the support level, offering a balanced approach to manage risk and maximize potential returns. Based on the historical data and forecast, TRON shows a downtrend. The price has been fluctuating within a range between $0.314 and $0.333, with a recent forecast indicating further decline. The RSI consistently stays below 80, suggesting that the asset is not overbought. However, the RSI has been below 50 for a significant period, indicating a bearish momentum. The Bollinger Bands show that the price is nearing the lower band, which could indicate a potential oversold condition. Considering these factors, I recommend a contrarian strategy that aims to capitalize on potential short-term rebounds. My strategy will be a combination of RSI and Bollinger Bands. We will enter a long position when the RSI reaches an oversold level of $35 or below, and the price touches the lower Bollinger Band. The entry price will be $0.305. The stop loss will be placed just below the support price at $0.30. The target price will be set at the resistance level of $0.333. If the price fails to reach the target and instead breaks below the stop loss, we will exit the position. This strategy aims to capture quick profits from short-term price bounces while limiting potential losses. Based on the historical data and forecast, Dogecoin shows a downtrend, particularly evident in the recent price declines and the forecast predicting further drops. The RSI consistently fluctuates below 50, indicating prevailing bearish momentum, with dips below 30 signaling oversold conditions. The Bollinger Bands are contracting, suggesting decreasing volatility. Given these signals, I recommend a short selling strategy. We will enter a short position at $0.2 on October 17, 2025. The stop loss will be set at $0.22, just above the upper Bollinger Band, to protect against potential short-term reversals. The target price is $0.186, aligning with the forecast for October 23, 2025, and also near the established support level of $0.185. To optimize this strategy, we'll incorporate RSI confirmation. If the RSI falls below 20, signaling a strong oversold condition, we'll maintain the short position, adjusting the stop loss to the recent low of $0.189. Conversely, if the RSI rises above 80, indicating an overbought condition, we'll close the short position and reevaluate the market. This combined approach leverages both the downtrend and technical indicators for enhanced risk management and potentially higher returns. The portfolio will be 60% short selling, 30% RSI confirmation, and 10% Bollinger Bands confirmation. Based on the historical data and forecast, Cardano has shown significant volatility with a general downtrend. The RSI consistently dips below 50, often entering oversold territory below 30, suggesting potential buying opportunities. The Bollinger Bands indicate periods of contraction and expansion, with the price frequently touching the lower band. Considering the forecast for the next week, the price is expected to remain near $0.63, potentially testing the support level. Therefore, I propose a contrarian strategy focusing on short-term bounces. We will enter a long position at $0.641, placing a stop loss at $0.63 to limit potential losses. The target price will be $0.699, capitalizing on a potential rebound towards the recent high. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI is below 30 and the price touches the lower Bollinger Band, it strengthens the buy signal. We will reevaluate the position on October 23, 2025. If the price reaches $0.699, we will take profit. If the price falls below $0.63, we will cut our losses. This approach balances risk and reward, aiming for quick profits during potential short-term recoveries while protecting against further downside. The overall portfolio will be 60% long position and 40% cash. Based on the historical data and forecast, Wrapped Beacon ETH has shown significant volatility with a recent downtrend. The support price is consistently at $4,010, and the resistance is at $4,470. The RSI indicates periods of oversold and overbought conditions, with recent values trending downwards. The Bollinger Bands also show increased volatility, with the price frequently touching the upper and lower bands. Considering these factors, I propose a combined strategy utilizing RSI and Bollinger Bands for optimal returns. First, we will implement a strategy based on the RSI. When the RSI drops below 33, indicating an oversold condition, we will enter a long position at $4,210. The stop loss will be set at $4,150, just below the forecast price and the lower Bollinger Band. The initial target price will be $4,270, aligning with the forecast price. If the price reaches $4,270, we will move the stop loss to break even. Second, we will use the Bollinger Bands. When the price touches the lower Bollinger Band, we will enter a long position at $4,180. The stop loss will be set at $4,150. The initial target price will be $4,290. The final portfolio will be a combination of these two strategies, prioritizing the RSI strategy due to its clearer oversold signals. This combined approach aims to capitalize on short-term price fluctuations while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, Chainlink has shown a significant downtrend, particularly evident in the recent price action and the bearish forecast for the coming week. The price has consistently tested and failed to break through the resistance level of $21.3, while the support level remains around $17.2. The RSI consistently dips below 50, indicating a weakening momentum. The Bollinger Bands show a contraction, suggesting a period of consolidation before a potential breakout. Considering this, I recommend a short selling strategy. Entry price will be $17.6, with a stop-loss order placed at $18.9 to protect against a sudden reversal. The initial target price is $16.4. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. When the RSI dips below 30, signaling an oversold condition, we'll initiate a short position at $17.3. The stop-loss will be set at $18.3, just above the upper Bollinger Band, to account for potential volatility. If the price breaks through the upper Bollinger Band, we'll consider covering the short position. The primary target price will be $16.7, aligning with the forecast low. This combined strategy leverages both technical indicators and the prevailing downtrend to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Tezos has shown significant volatility with a recent downtrend. The RSI consistently dips below 50, indicating a weakening momentum, and recently touched 27.1, signaling an oversold condition. The Bollinger Bands have been widening, suggesting increased market uncertainty. Considering the forecast prices hovering around $0.57 to $0.59, and the support level at $0.58, I recommend a contrarian strategy focused on anticipating a potential bounce. We will implement a buy strategy when the RSI reaches an oversold level of 20. Specifically, enter a long position at $0.57, with a stop-loss placed just below the support level at $0.56. The initial target price will be $0.63, aiming to capture a short-term rebound. To refine this strategy, we'll incorporate Bollinger Bands. If the price touches the lower band around $0.575 and the RSI is below 30, it strengthens the buy signal. If the price moves above the middle band of the Bollinger Band, we will raise the target price to $0.65. This combined RSI and Bollinger Bands approach allows for a more robust entry and exit strategy. This strategy aims for high returns by capitalizing on short-term volatility and potential reversals, while carefully managing risk with defined stop-loss levels. Based on the historical data and forecast, official Trump exhibits significant volatility, with a recent downtrend followed by a partial recovery. The RSI consistently dipped below 30, indicating oversold conditions, particularly on October 12 with an RSI of 21.0. The Bollinger Bands show that the price has been fluctuating within a wide range, recently touching the lower band, suggesting potential for a rebound. Considering these factors, I propose a strategy focused on capitalizing on potential upward momentum following the oversold period. We will enter a long position at $5.89, placing a stop-loss order at $5.66 to mitigate potential losses if the downtrend continues. Our initial target price will be $6.29, aiming to capture a portion of the anticipated recovery. To refine this strategy, we will incorporate dynamic adjustments based on the RSI and Bollinger Bands. If the RSI rises above 60, we will consider tightening the stop-loss to $5.9 and adjusting the target price to $6.55. Conversely, if the price breaks below the lower Bollinger Band, we will immediately exit the position. This adaptive approach will help navigate the inherent volatility of official Trump and maximize returns while minimizing risk. The core strategy is a combination of RSI oversold bounce and Bollinger Bands confirmation, with dynamic adjustments for optimal performance. Based on the historical data and forecast, Sun token shows a downtrend with decreasing closing prices and a consistent forecast of lower prices. The RSI consistently stays below 60, indicating a lack of strong bullish momentum. The Bollinger Bands have been contracting, suggesting decreasing volatility, and the price is nearing the lower band. Considering these factors, I recommend a short position strategy. Enter a short position at $0.024. Set a stop-loss slightly above the upper Bollinger Band at $0.027 to limit potential losses if the price unexpectedly reverses. The initial target price should be the support level of $0.0213, aiming for a profit of $0.0027 per SUN token. To refine this strategy, we'll incorporate RSI signals. If the RSI drops below 20, oversold, consider covering the short position and waiting for a potential bounce. Conversely, if the RSI rises above 80, overbought, it may signal a reversal, and we should adjust the target price. Given the forecast for further price declines, maintaining a short position with a stop loss at $0.027 and an initial target of $0.0213 appears to be the most efficient approach for high returns. This strategy combines trend analysis, volatility indicators, and RSI signals to maximize profit while minimizing risk. Based on the historical data and forecast, Dogecoin shows a downtrend, consistently testing the support price of $2.1. The RSI has been consistently below 50, with periods of oversold conditions, below 20, particularly on October 13th and 14th. The Bollinger Bands indicate increased volatility, with the price frequently touching the lower band. The forecast suggests continued downward pressure, with prices ranging from $2.17 to $2.06. Therefore, I recommend a short position strategy. The entry price for this short position should be $2.17, capitalizing on the initial forecast price. A stop loss should be set at $2.3, just above the upper Bollinger Band to avoid being trapped in a false breakout. The target price is $2, aligning with the predicted low and providing a reasonable profit margin. We will use a combination of RSI and Bollinger Bands to manage this trade. When the RSI falls below 20, we will enter a short position. If the price touches the lower Bollinger Band, we will consider tightening the stop loss to $2.2. This strategy aims to capture the downward trend while mitigating risk through strategic stop loss placement. Based on the historical data and forecast, Lido DAO has been exhibiting significant volatility with periods of both upward and downward trends. The price has tested the support level of $0.807 multiple times, and the forecast suggests a continued downward trend in the short term, with prices hovering around $0.884 to $0.893. Considering the RSI consistently below 50, particularly dipping to 31.8, indicating oversold conditions, and the Bollinger Bands showing a contraction, I propose a contrarian strategy focusing on potential rebounds. We will initiate a long position at $0.884, placing a stop-loss order at $0.834 to mitigate potential losses if the downward trend persists. The target price for this trade will be $0.973, aiming to capitalize on a potential bounce from the support level and a return towards the mean. To refine this strategy, we'll incorporate Bollinger Bands analysis. When the price touches the lower band, it signals a potential buying opportunity. The forecast data indicates the price is approaching the lower Bollinger Band, strengthening our entry point. If the price falls below $0.834, we will immediately exit the position to prevent further losses. Conversely, if the price reaches $0.973, we will take profits and consider re-evaluating the market conditions for a potential short position if the downward trend resumes. This combined RSI and Bollinger Bands approach offers a balanced strategy, leveraging both momentum and volatility indicators for optimal risk-reward management. Based on the historical data and forecast, BNB shows a volatile trend with periods of both bullish and bearish momentum. The RSI consistently fluctuates above 50, indicating a generally bullish sentiment, although it briefly dips below 50 on October 11th and 12th. The Bollinger Bands demonstrate increasing volatility, with the price frequently touching the upper and lower bands. Considering these factors, I recommend a combined strategy leveraging RSI and Bollinger Bands. We will initiate a long position at $1,150 when the RSI falls below 50, anticipating a bounce from the oversold level. A stop-loss order will be placed at $1,130, just below the support level, to mitigate potential losses if the price continues to decline. Our target price is set at $1,250, aligning with the recent resistance levels and the upper Bollinger Band. To further refine this strategy, we'll incorporate the forecast data. If the price approaches the lower Bollinger Band around $1,150 on October 23, as predicted, we will enter a long position at $1,150. The stop loss remains at $1,130, and the target price will be $1,200, slightly adjusted to reflect the more conservative forecast. This blended approach combines the momentum signals from the RSI with the volatility indicators from the Bollinger Bands, maximizing potential returns while managing risk effectively. This portfolio will be the most efficient one. Based on the historical data and forecast, Pendle shows a downtrend. The price has been fluctuating, but the recent forecast suggests continued decline. The RSI consistently indicates oversold conditions, particularly with a reading of 28.3 on October 16, 2025. The Bollinger Bands show the price approaching the lower band, confirming the downward pressure. Considering these factors, I recommend a short position strategy. Enter a short position at $3.38. Set a stop loss at $3.53, just above the recent resistance level. Target a price of $2.83, aligning with the forecast for October 23, 2025. To optimize the portfolio, we'll combine the RSI, Bollinger Bands, and support/resistance signals. Given the oversold RSI and the price nearing the lower Bollinger Band, we'll prioritize the short position. The initial short entry at $3.38 with a stop loss at $3.53 provides a buffer against potential upward spikes. The target price of $2.83 offers a significant profit margin based on the forecast. This strategy balances risk and reward, capitalizing on the anticipated downtrend while incorporating safety measures to protect against unexpected price reversals. This combined approach is designed to achieve high returns with controlled risk. Based on the historical data and forecast, TRON shows a downtrend. The price has been fluctuating within a range between $0.314 and $0.333, with the recent forecast indicating further decline. The RSI consistently stays below 80, suggesting that the asset is not overbought. However, the RSI has been below 50 for a significant period, indicating a bearish momentum. The Bollinger Bands show that the price is nearing the lower band, which could indicate a potential oversold condition. Considering these factors, I recommend a contrarian strategy that aims to capitalize on potential short-term rebounds. My strategy will be a combination of RSI and Bollinger Bands. We will enter a long position when the RSI reaches an oversold level of $35 or below, and the price touches the lower Bollinger Band. The entry price will be $0.305. The stop loss will be placed just below the support price at $0.30. The target price will be set at the resistance level of $0.333. If the price fails to reach the target and instead breaks below the stop loss, we will exit the position. This strategy aims to capture quick profits from short-term price bounces while limiting potential losses. Based on the historical data and forecast, Virtual's protocol has shown significant volatility, with a recent downtrend and a potential for a rebound. The RSI consistently dips below 30, indicating oversold conditions. The forecast suggests a sideways movement with prices hovering around $0.75 to $0.78. Considering the support price of $0.706 and the recent oversold RSI, I recommend a long position at $0.743. To manage risk, set a stop loss at $0.706, just below the established support level. For the target price, I anticipate a move towards the $0.875 level, representing a potential gain of 132 cents. To refine the strategy, we'll incorporate the Bollinger Bands. The current price is near the lower band, reinforcing the oversold signal. A close above the middle band, currently at $0.758, would act as a confirmation signal. If the price breaks above the upper band of $1.03, it would suggest a strong upward momentum, and we can adjust the target price to $0.875 plus $1 equals $1.875. This combined strategy, leveraging RSI and Bollinger Bands, offers a balanced approach to capitalize on potential price recovery while mitigating downside risk. Based on the historical data and forecast, PAX Gold demonstrates a strong upward trend. The closing prices have consistently increased from $3,880 to a forecast of $5,020 over the past 2 weeks. The RSI consistently remained above 75, peaking at 91.3, indicating overbought conditions, but the price continued to rise. The Bollinger Band showed the price consistently near the upper band, confirming the bullish momentum. Therefore, I recommend a long position strategy with an entry price of $4,410. To mitigate risk, set a stop-loss order at $4,300, just below the recent low of the Bollinger Bands. For the target price, given the forecast reaching $5,020, I suggest a target of $4,830 for a conservative approach, aiming for a 9% gain. To refine the strategy, I'll incorporate the RSI. When the RSI dips below 30, oversold, it signals a potential entry point, but given the strong uptrend, this is unlikely. Instead, we'll use the overbought condition as a potential exit point. If the RSI reaches 90 or higher, consider taking partial profits at $4,510, securing some gains while allowing the remaining position to run. The final target price of $5,020 will be reached if the upward trend continues. This combined strategy leverages the bullish momentum, incorporates RSI signals for refined entry and exit points, and utilizes Bollinger Bands for stop-loss placement, aiming for a high-return investment in PAX Gold.